Hi, this is Zak Mir with a Bulletin Board Heroes Pharma special here on Share Talk, covering obviously the COVID plays, etc. Starting on with Avacta, where I suppose the easiest part of this chart really is to say that while above the floor of the channel from April at £1.50, we should be heading up to £2.50. Obviously, the stock doesn't really know that and has decided to be in a sort of random dance for most of the post-June period. We've had false breaks to the upside and the downside. I suppose the last false break was the one mid-October, the 19th of October, where we briefly broke the initial 191 peak and then came all the way back again. There is some support on this rather obscure August support line, which is which was a former resistance line at £1.58. So that is a potential buy the dip area, but really it's 150 and 250 for Avacta, and difficult really to come up with anything more precise than that at the moment. On to 4D Pharma, which we're hoping is a slightly better position or situation, but actually isn't really. We had that falling wedge breakout through a pound, which gave us the move up to £1.44. That was predictable in the sense that that was old support pre the fall around 140 becoming new resistance. So the stock did give us that, and that was good. There was one easy day to get through the 140 level. Now we've got to dance either side of the 50-day moving average. That's at £1.22. So you've got the choice either of looking to buy again around £1 or wait for an end of day close above the 50-day line. And then hope that the shares will not only take out 144, but hit the top of the September triangle up to £2 as a best case scenario. But with the 50-day line currently rising, I'll probably go for the end of day close through the 50-day line, and then take one's chances in terms of the shares then going on to retest the best levels of the year. But another messy situation there. On to Fusion Antibodies, where again, we've got a rather rough ride between £1.40 and £2 over the last month or so. Probably the most, or the easiest thing here to do would be to wait for the shares to hit the 50-day moving average at £1.32, which, given the recent consolidation, it seems relatively likely. £1.33 was the peak in July as well. So let's see if we can get around the low 130s as an entry point. Otherwise, the option is to wait for an end of day close above the 20-day moving average at £1.63 and try and chase the shares up towards £2 plus. Again, the only problem is that the spread on this stock is rather wide, so that makes it a bit more difficult. But at least while we're above 132, the bulls are on the right side of the trend. Probably the easiest stock at the moment is a relatively new one, I think, probably for most people, Inspiration Healthcare. This hasn't had the hype of many of the other names I mentioned before. Big break here, I suppose, was the gap mid-month through that resistance line from March around the 72, 73 pence level. While we're above that line, we are looking towards the top of the rising trend channel from March, as high as £1.15, and that could hopefully be hit as soon as the end of next month. But the attraction here is it looks relatively clean and relatively straightforward. Anything back below 74, 75 really delaying or even cancelling the upside scenario there. Nobosite is the next contender, and this is interesting because the shares did actually finally manage to hit the £12.50 area that I was looking for. I think maybe I was looking for £12.80 to be perfectly honest, but they went almost up to the top of that channel there from September, which was the most optimistic scenario in terms of the upside. Current situation is that while we're above that initial October peak at 974, we're hoping on a retest of 1270, 1280, and that September resistance line. Although again, like the other contenders in the pharma area, things have gone very volatile, and that makes it all the more difficult. You can see that even though we had a higher peak for late October, we actually had a lower RSI peak, so that was bearish divergence, and it's quite impressive of the stock to have bounced off £9 and up to £10.62 intraday today, given that bearish divergence. So let's say hidden strength in the shares, and definitely £9.75 the level to watch out for to avoid the risk of a bull trap on the shares. Moving along to N4 Pharma, which one hopes is going to be less fraught than Novacyt. We've had here a couple of trendline breaks. So there was in October so far. So the one around 6.25, the next one around 7. A little bit of follow through on either, but disappointing so far. Probably the easiest thing at this stage is to look for dips towards the 6p area, which is mid-October support, and then look for a rebound from that kind of area, hopefully up to 8p or 9p. Mega Diagnostics is next, and here we can see that shares again have gone into a rather messy holding pattern since making that new high for the year. Risk is of a test of support towards the 80p level. If you're really keen on the stock, maybe you'd go for an end of day close above the 20-day moving average at 96p to point the way higher to that line of resistance from July, heading towards £1.20, and then the final, hopefully end of year target for the stock up to 140 at that April resistance line projection. But certainly a bit of a right-hand shoulder there, and probably the easiest thing, as I said, is to wait for a move to the September uptrend line and the 50-day line just around the 80p area. OKYO has been slightly flat of late as well. Stock which did make that sort of false breakthrough 12p, 13p earlier in the month. Really need to see an end of day close or a weekly close back above 12p, which has been the recent, let's say, shoulder resistance, right hand shoulder resistance on the stock. If we can get that, then and hold above that on a decent basis, we still have the possibility of a 20p plus target here. But shares really need to hold 10p at least as a minimum, and the floor of that rising May trend channel to keep the best of the bear argument alive. Orphan did well as well earlier this month with great news regarding the government and orders there. Current situation is that we've got an uptrend line here, which the shares are just moving around to test. Let's call that around the 22p level. While we're above that, then we will be reasonably confident that the shares are not making a near-term top. But if you're looking for a resumption of the bull run here, a clearance back above 25p is what you're looking for, and above 25p, then we're back on for the a year-end target here as high as 40p. A couple of stocks to go now in this rather long session. Synairgen is the next contender. Here we've got a situation where recent support for the shares has come in at the 20-day line, so that's around the £1.80 level. There is the next level down, which would be down towards the £1.50 area, so we want to really avoid that. If you're a momentum trader, which is probably the best way of approaching this at the moment, then you'd be looking for an end of day close above the 50-day moving average at £1.88 to then take the shares up to a new target there through £3. So that's probably the best thing to do, even though we've already had one false dawn move through the 50-day line. Finishing off with Tiziana, which is in the run-up to the AccuStem situation, the free share offered to people by the end of the month if they're holders in Tiziana. Currently we're in this small rising trend channel for October. Don't really want to see the shares back below the 20-day moving average at £1.67. If we do, then there's the risk of a retest of the 50-day line at £1.50. But at least while we're above the 20-day line, looking for a retest of the £2 area. That's it for me today. More updates on the normal bulletin board heroes tomorrow.